Thanks, Caroline. And joining us for Options Insight today is Scott Bauer, CEO of Prosper Trading Academy. Happy Monday to you, Scott. And we finally have the VIX, or that fear index, below its 200-day moving average. Earlier today at its lowest level since before the sell-off in late February, at its lowest level since early February, I should say. Do you think that that's it? Is all of the volatility done, Scott?
No way. I'll be very clear with my opinion with that. No way. There's just way too much out there, Abigail, in terms of economic headlines, risk headlines, geopolitical risks, and, of course, the election. So are we done? No. Do I think we're getting back into the 40s, 50s, 60s? No. But I think we're going to be in the 30s much sooner rather than later.
You know, that's interesting because the VXN, or the NASDAQ 100 VIX, still at 30, and there's some technical patterns, especially in that chart, that suggest there could be a big spike up. Let's see whether or not that happens. Speaking of charts, one that's really pretty baffling at this point, the dollar index, the Bloomberg dollar index, it's hard to know what's next, really stuck in a range. What do you see there, and then how do you play gold off of that?
Really good question. I mean, the dollar's been weakening just because of, reopenings and economies getting back together here. But if you look, there's some massive support for the dollar just lower from where we are right now. I think it actually goes back to the March lows. Mm-hmm. So I don't see the dollar drifting down much lower from here, which you would think would be contrary to gold rallying, right? They usually offset one another. They work opposite one another. But I think gold continues to rally even if the dollar settles in and starts to move higher.
That's definitely an interesting call. And, looking at a chart right now here of the dollar index, the RSI probably supports your idea that some pretty strong support is there. So if you think that gold is going to rally, it's pretty amazing. Over the last 2 years, I think gold up about 50% or so. How do you play that through options?
Sure. So I'm going out to September, Abigail, and I'm looking at the September 170, 180 call spread. This is now in GLD. Okay, this is in the gold index, in the ETF, the Gold Trust ETF. That pretty closely replicates the price of gold. I can buy that upside call spread for a little over $2, maybe $2.25 or so. Gives me 2 months to let this play out. And again, I personally think that as we get closer and closer to the election, there's going to be some risk-off sentiment, in my opinion, to the marketplace. And I think that's just going to provide more tailwinds for gold and especially the GLD ETF.
And super quickly, Scott, what about the poor man's gold? Taking a look at silver today, it's up almost 3%. Do you think that will rally right along with gold?
It really should. It's making up for a lot of lost time here. And, silver got hammered as the economies got hammered. And as the world starts reopening, that's where silver's biggest, production, that's where their biggest asset is economically. So as economies are opening up, that's why we're seeing that gold-silver ratio come back down and maybe back towards in line a little bit. So, yes, it should continue to rally.
Well, net, Scott, your cross-asset picture makes a bit of sense. If you think that stocks might be selling off, maybe we will see that haven bid. And where the dollar fits in, I guess we'll have to watch that all unfold as it does. Scott Bauer, CEO of Prosper Trading Academy, thank you so much for joining us for Options Insight on the day. And from New York, this is Bloomberg.